Hi everyone, my name is Abhishek Jalan at Grovy Developers and welcome to Grovy Studios.
And hi, I'm Firas Zakout. I'm from White & Co. and I'm a property investment advisor here in Dubai.
So, another episode of Grovy Studios where we discuss with potential investors, buyers, channel partners, contractors to understand what the real things are happening in the market, which can be challenges, opportunities, and experiences that we try and sit and figure out and possibly find solutions for those scenarios. So, Firas, thank you for joining us today at Grovy Studios. We're very happy to have you here.
Yeah.
And let's dive into our conversation. Let's understand about you first as to why you are in Dubai and why UAE attracted you.
I did something similar to you in Australia. I had a property and construction business for 17 years. Mm-hmm. And the situation in Australia after COVID started to change. Things weren't the same as they were before. I always used to tell people business was always hard, but the reward was worth the pain that you go through, right? But after COVID, that just evaporated. So we made a decision to come and visit the UAE just for a holiday.
Okay.
And that was like, I don't know if you know, in Melbourne, we were locked down for a good, almost a year, under lockdowns for COVID.
That's going to be tough.
So I was running the business from the dining table, and trying to go out and do anything, but that's for another day. Anyway, went for a holiday here, and that was when Expo was on.
Okay, so 21.
Yeah, down in Expo City. And we were just blown away by the infrastructure, the way the city was managed, the way how safe it felt. Not the traffic was terrible.
we won that. Yeah. Now we won that.
Yeah. And then we came back to Australia after that holiday and we thought we'd forget about it. And then we just, for the next 2 or 3 years after, we'd keep coming back, during December, January.
Yeah, best time.
And we made a decision around that time, a few years ago to seriously look at moving here. Mm-hmm. And why did we want to move here? Because I kind of came to a conclusion that I wanted to finish what I was doing there from a business perspective and start something new. Mm-hmm. And I wanted something a bit more for my kids, to be a bit more, have a bit more interaction with the world, be closer to the rest of the world. And, fast forward June 2025, last year, so we've been here for 1 year.
Okay.
And I joined White & Co. at that point of time, and I came here by myself first for 6 weeks before my family came. I came here, set everything up, started my work, found a rental, got my IDs done. And then I brought my family here a couple of weeks before school started, the school term started. Yeah. So, but it's quite a journey, it was very nice. The only thing that I didn't get quite right was we shipped our furniture to come here. So we had about 2 weeks worth of, 2 weeks with no furniture in the house.
Okay.
So we had to buy some temporary mattresses and all this type of thing. But other than that, everything went pretty smoothly.
So, a little off topic. Yeah. So, I hear this a lot from people. Whenever they're moving, they move their furniture as well.
Yeah.
Something that comes to my mind is why?
Yeah, so if I didn't have to, I probably wouldn't have brought my furniture here. But what happened was, while we were in Australia, I sold my house and I bought some land. Mm-hmm. And I was going to build our forever home.
Okay.
In that, on that plot of land.
Okay.
I got everything designed, ready, approved. And at that point of time, because we sold our house, we stayed at our mother-in-law's house. And we said to her, look, we're only going to be here for 9 months while we're building the house.
Yep.
And then we'll move. So I put that furniture into storage.
Okay.
Right? And when we decided to move here instead of stay in Australia, I sold that plot of land. I didn't build that house. And I had that problem of my furniture still in storage in the container. And it would have been impossible to try and sell it, to somebody while it's in the container. Because every time someone wants to have a look at a couch or a bed or something, I'd have to pull everything out, show them,
Yeah.
You know, so we just decided to bring it with us.
Okay. Okay.
And it was pretty good furniture as well. Like it's
Yeah, I
pretty
mean,
high quality.
if you're, it's already in the storage,
It was
then the
already
whole
in
thing
storage.
just picked up.
They literally just picked it up
Yeah.
and put it in a ship and brought it here.
Shipment was
Yeah.
what, $2,000 a container.
Yeah, a bit more than that, but yeah.
So very cost effective in that way.
Yeah. Look, what I would have spent for furniture here would have been, for a whole house, would have been the same as what I paid to ship the furniture.
Okay.
You see?
So if someone new is moving, then if they can lose the furniture, it's better.
100%. There's no point in bringing it if you can sell it and get rid of it, you know. The cost is the same. I just didn't have the opportunity to be able to sell it there easily, you see. Yeah.
So the main things that attracted you was the charm of Dubai, in the end.
Mate, it's just such a beautiful place.
100%. Yeah.
Right? Like, I knew about Dubai beforehand, before we came for Expo. It's not like I didn't know, oblivious to it, but I just thought it was this boom and bust type of place, and it was just too good to be true.
Yeah.
Like a lot of people still think now.
100%.
Right? Yeah.
So I have a story in line with that. So whenever we travel, not in the last 5 years, but before that, and we would say that, you know, we're coming from Dubai, people would be like, oh, are you guys allowed to go out? Is the female allowed to, you know, the women allowed to drive? Like, yes, I mean, because obviously they're thinking of Saudi maybe, or something else. But yeah, the thought process and it looks like the marketing has not gone everywhere. So yeah, those were the kind of questions in 2015, 16, 17. You know, we would get in developed economies.
Yeah.
You would travel to Europe. You would get questions like this. People coming from other parts of the world because they'll be tourists and also, and you end up interacting with other people. So these are the kind of questions that come.
Yeah.
Are you guys allowed to do this? Is there? Do you have restaurants over there? I'm like,
yeah, like all this stuff. Like, there's a lot of people, when they see it on social media or anything, they think that's just too good to be true.
Yeah.
Right? They just don't believe it. And then they come here. Like I've got a few clients here right now this week that I'm showing them around and talking to them about their relocation process and buying some property for them. And they're like, I'm driving with them and they just can't fathom the ease of
doing things. Yeah.
Oh, so this is all I need to do to buy this house. I'm like, yes, you know, Form A, Form B, Form F, you know, to buy an existing property. This is what you need to do for your Emirates ID. Get your checkbook. You know, if you want to rent, this is what you need. And what happens is they get this new spark inside of them. They start to get excited because I deal with a lot of business owners in Australia that come here and they want to either set up a new business here or move their family here or be in between two bases. And they just can't fathom. They're like, okay, so you're telling me I can employ X amount of people now, right, to run this business for me, and I don't have to be there anymore. They can't do that in Australia.
Yeah.
They're always hands-on in Australia. And I'm not saying don't be hands-on in your business, but there is enough margin here, costs versus what you're going to charge something, to be removed from your business. You see?
Scaling up is, I mean, the opportunities, it's easier.
Yeah.
You are able to get into that a little more easily compared to the rest of the world. I mean, you said Australia, I can compare it with India as well. It's a bit challenging to set up companies.
Yeah.
Just as simple as setting up companies. So and then the taxation and the policies and all those things. The cost from a compliance level is lesser in today's world in UAE compared to the rest of the world. Because it's all very streamlined, it's all very automated, and you know, things can be done by the system as well.
Yeah.
So Firas, next question that I want to touch base is, obviously we are in real estate industry, so I think the baseline is the real estate industry. So one thing I want to ask you, if you can describe Dubai real estate market in one sentence, what would it be and why?
I would describe it as, in words, instead of one sentence, words, exciting,
Okay.
opportunity, and progress. Okay. Why I say these things? Exciting is there's a lot of really good There's a lot of really good projects out there that, and whether it's secondary or off plan, that really tick a lot of boxes for people, end users that want to live here. So, for example, if someone wants a townhouse project, or if someone wants a townhouse property or a villa property, they're buying something there that's more exciting than what they're buying back home in Australia. I'm just comparing back home. Like we're talking, like for example, if you want to go buy something in Talal or Gaff or Jumeirah Golf Estate, or you're buying into not just a house, you're buying into a full community.
Yeah.
Fully serviced. You have access to pools and parks and gyms, saunas, golf courses, right?
Yeah.
In Australia, when you buy a property, generally speaking, a freehold, detached property, you're buying into a suburb, but it doesn't have all these extra facilities. Right?
So you essentially stand alone, and that's it.
That's it.
Nothing from the community gets serviced, or so who maintains what happens to the community? In
the council, you pay council rates.
Something similar to the UK.
Yeah.
So there you have the owners association, let's say, and they're charging a fee to manage the community.
Yeah, well, it's not even an owners association; it's the actual council of that region area that you pay them a fee every quarter.
So it's government regulated.
Government, all government.
You all know how that works.
Government everywhere. And the opportunity is here, right? So people, every time I get a phone call from, for example, someone from Australia, especially in the construction and property development industry, they immediately think that they have to replicate what they're doing over there, over here. I want to become a property developer. And I'm like, why? I ask them why. Oh, because that's how you make, in Australia, you add value to a property and then you make money that way by adding value. I'm like, yes. I go, that's right. I go, but there's a lot easier ways here to make money as well. You can buy something in a good location, off the plan, that's not ready for 3 or 4 years, and just put your money in that and let the market do its thing with the appreciation. Yeah. But they can't fathom that it's that easy. You see? And I'm not saying every project is going to be successful and everything is easy. But when you compare it to what they have to do to earn a good return in Australia, and the risk they have to take versus here, this market makes it very exciting.
Does it help that the dirham is pegged to dollar?
It does, yes.
Do you see a lot of volatility in the Australian dollars?
No, it's pretty steady. It's pretty steady.
Stable, yeah.
It's pretty stable, and the Australian dollar is actually pretty strong now, right? Okay. Than it was a few years ago, and they're getting a lot more bang for their dollar when they're buying here.
Okay.
When we're doing the transfer. Yeah.
Okay.
Yeah. But yeah, there's a, and that's I'm just going back to the property market here. That's what I'm seeing. Yes, we've had a bit of a setback with the current situation that we're in, or that was. But I feel that this market also needed a bit of
just cool down.
Yeah. Let's just reset a bit. And now what I'm finding is we're getting some really good buying opportunities.
Yeah.
Secondary and off plan.
Yeah.
Which has made actually more buyers, and I've been busier than I was last year.
Oh, that's good.
Because more buyers are coming saying, "Hey, let's buy something," because they know they can get it at a more reasonable price, and the ROI will in a few years will get much better, and then capitalize then.
So to add to those points that you mentioned in terms of why the developer is coming from Australia to you, what is the objective? What do they want to achieve? So on that ground, I think something which is very clear for us and which is built in our DNA is that we are in the business for wealth creation.
Yeah.
For us, real estate is about creating wealth.
Yes.
And we feel that real estate is probably the best way for wealth creation because you can pass it on generations. You have obviously taxation benefits. Obviously, in this country, there's regulations which is evolving. But as and when those regulations will evolve, real estate will even play a more critical role in that. And you are looking at assets which give you higher rental yields, which are bankable, which you can pledge to the banks, on which you can get liquidity. And these are the things we try and educate our customers that you do not, even with the payment plan properties that many developers are selling, it doesn't have to be that you end up spending all your money on buying the property. You should be looking at a certain amount of leverage. One thing which is critical that people need to figure out, or the consumers need to understand over there is the property priced fairly?
Yes.
Because if it's not, then that can be very detrimental in terms of the investment side of it. When you're looking at inflation, UAE inflation is between 2 to 3%.
Yeah.
The official data talks about, say, 2.5% inflation. And when we put the data across 20 years, we're looking at a 2.5, I think 175 to 2.5 as a median across the year. when we look at the real estate prices over the last 20 years, okay, we are not taking the last 4-5 years in consideration because there has been an exponential growth because of fundamental elements. Fundamental element primarily being the population coming into the country. Without that, if we are looking at a 3.5% capital appreciation year on year. Real estate capital appreciation is directly linked to your inflation, and that's a very basic mathematical or rather economical indicator in the market. So when we are looking at a 2.5, let's take at a baseline 2.5% capital appreciation. I can, to a certain degree of confirmation, tell anyone that okay, fine, you're buying a property today. In 3 years, you're looking at say 5.5-6% appreciation on that. You should be looking at that. It should not be the other way around, where you're buying a property and on completion you're selling at a discount. If the market is flat, if the market is going up and you're getting some benefit, that's the benefit coming from the market, not because the asset was priced right. So that differentiation is what we try and educate our channel partners as well, our customers as well. And it is very important, again, when we talk about wealth creation, having that built into the product, that the pricing needs to be right. Because if the pricing is not right, retail customers will never make money out of it. And at least in the completion cycle. After the completion cycle, whatever happens is because of the market, not because of the product.
Definitely, and also what happens is what I'm seeing happening as well. Sometimes if someone's bought something off plan, and they can't keep up with the payments for whatever reason, something's happened in their life and they have to sell this product, this thing, off the plan during construction, before handover, and some developers have a certain amount of what you have to pay before you're able to release it to someone else, sell to someone else. That person starts to get a bit, jittery, and he wants to get liquid. So it's very common for that person to sell it at an original price or under original price. And I think sometimes that's where you can get some good opportunities as well.
Sure.
Where someone else is let's just say that project's 4 years, a 4-year project. You're at year 2.5, 3, and you take that on for the same price that someone bought it,
2 years back.
2 years back. I think that's some opportunity there as well.
True, that there is opportunity, but what we also try and do on this is, so we educate our investors that your payment plans are such, and we do not, or rather we encourage a certain amount of leverage, not over leverage. So typically it would be less than 1:1. So when we are within that threshold, the chances of a default like this scenario should be less. So if we are having high default ratio, that means our investors or our customer base have been pushed to buy the product.
Definitely.
If it's a large percentage, let's say if it's more than 3 to 4, 5%, beyond 3%, then there is some degree of hard sales which has happened, which should be avoided.
The projects that I see this happening a lot is the projects that have a very aggressive payment plan. 70-30, 80-20, 65-35, 60-40 is fine,
I think the market standard, well, in my opinion, this is my personal opinion again, the payment plan should be flat across all developers.
That'd be great.
It should be same. What should be the payment plan? Every 5% completion, you get 5% payment.
Talk me through that. This is interesting.
So a payment plan that we offer, and which is the reason why we offer that payment plan is again going back to the philosophy of wealth creation. So when we are doing something like a construction linked payment plan, what happens is the customer pays a certain 10%, 20% deposit. The next payment is due once we reach a certain construction milestone. So because the payment is linked to construction, the customer doesn't have to pay till we don't reach that milestone. In this way, we are protecting the customer, we are protecting the developer, and we are protecting the product primarily. We are making sure that the product delivery is ring-fenced. Now, the money which is coming for construction, let's say whatever payment comes, gets utilized towards completion. And the primary reason why the developer is in existence is designing a product that sells, arranging funds for that product, which can be through sales and through banking, which is both these channels which we are using, and which builds our credibility as well. And the third thing is execution. And as a developer, if a developer is able to do all three of this, it's a no-brainer. Quality, timely delivery is important, but those all come at a second level. Primary objective is this. that you're able to design a product, you're able to arrange the funds for it, and you're able to execute it.
Yeah.
Everything else follows.
So your payment plan is, which I know about it, but just to talk about this, it's the construction linked.
Yeah.
And it's set on, and then you also offer a post handover payment plan, right?
So typically our IRR for a retail customer,
Yeah.
because obviously a lot of people do not know this, and a lot of retail investors don't know this. The product gets sold before it goes to the market at institutional level, at bulk deals, and a lot of those things happen. And then because of that, the price increase starts happening.
Yeah.
So we try and limit that. We say, well, we want our retail customers to make money, because you look at the financial markets. In the financial markets, when we're talking about equities or any other financial instrument, retail customer typically does not make the whole mindset of brokerage, or how a real estate, not a real estate brokerage, or financial brokerage services work, is the thought process that majority of retail investors will lose money.
Yeah.
And that is the underlying principle of how real estate brokerages work.
Yes.
And because of which a lot of false companies also start, which is not actually executing trades on the exchange. And I'll give you a brief as to why I'm able to tell you this information. Our thought process is we want our retail customers to make. We want our retail customers to come in and say, well, we worked with this developer. I know for a fact that this developer is committed. They will deliver the product, and I will make money on that product. No matter if I'm living there, if I'm investing in it, or if I'm going to use it for rentals. So underlying what happens when the retail customer starts making money, as a developer, your value starts increasing and continues to deliver on that product. So I think that's something which is quite critical for us. And the post handover payment plan, we were discussing, the minimum IRR that we typically offer to our retail customers is 12%, and that's the IRR. With the market growth, we've been able to go at a minimum 25%, and people have gone more than 80% as well on their IRRs.
Yeah.
So even in the projects we are selling now, our pricing is such that even after from March onwards, our pricing is holding, and we are able to have transactions on those prices.
The other thing that I like about having that option of having a post handover payment plan. Let's just, for example, if you decide to get to the end and you don't want to do the post handover payment plan, and you decide to take a mortgage instead and pay out the developer, that you still have a few options. And I love the optionality of it.
And there's another thing on that which I try to educate, but again, it depends on the customer to take it forward. So typically you will see, as you mentioned, payment plans of 20-80, 30-70, 70% being paid or 80% being paid on handover. What typically happens, a consumer might be thinking that I want to go to a bank and get a mortgage. What they also need to understand is, if they're buying a product as let's say 10 million, for example, on handover, if the product value comes less than 10 million, they will not get an LTV of 80%.
That's right, That is
even if it's 11 million, they might not get an LTV of 80%. Because banks' regulations change. Typically, you should be looking at a 65 to 70% to be safe. So here, based on the payment plan, the consumer is already trying to over leverage.
Well, anything over 5 mil anyway is 70%.
LTV is less.
So they have to even factor in a bit less.
That's just in case.
And then you have the cost for miscellaneous cost, which is never even considered. So typically let's say 50-50 also works well, because you are keeping a margin that, okay, fine, if the bank releases 50%, I have the balance to cover.
Look, what I'm getting clients in at the moment is two things. Okay, pot number one is the client that wants to take that low risk. They want to just put their toe in the market. And they're very big on having cash flow. They want to see and feel a product, right? That person, I would typically buy them a secondary property. And at this point of time, something rented is actually what we're looking for, right? Whereas before we're looking for something empty, right? It's the irony of the market changing, right? So we look at that now as something rented, so you can see out this period of the time we're in. And then we look at the other side, which is someone that's like, look, I don't need the rent. I've got surplus cash. I want to put it somewhere for capital appreciation. I'm like, look, let's not buy something that's ready. We need to buy something off plan that's not ready for a few years, to let the market do its thing and come back up. And you just sit there and ride the wave. Now, what these guys are really looking for, and that's why I educate these guys, is we need to get into projects that require you to put as as less as possible during construction.
Yeah.
So when you decide you want to sell it at the end, from a cash on cash return, that's what the number we're looking at, right? That makes sense, right? So then when they go, oh, but I want to go with X developer because, you know, I just know them, so, and they're just everywhere. They've got a 70-30 payment plan. 80 doesn't work for them, for that strategy, because when you do the calculation on 80% of what you've already paid 80,
It's very marginal.
it's not much. You've pretty much paid the 100% of the project.
Yeah.
Right? So they're the two buckets. Yeah.
Higher the risk, higher the reward.
Yeah. Well, that's the plan.
Yeah.
Well, that's the thing, right? And then you got in this pot. Then you go, well, there's different levels of risk.
Yeah.
Right, I'm not going to mention different risks.
no,
We don't want to do that.
yeah.
But you know, someone that wants to be next to the water, for example, I'd be telling them all day, and they want to be in Dubai. I'd be saying you need to be in Dubai Islands, because Dubai Islands, their square foot rate is so much less than the other waterfront communities that are very well established. There's a lot of headroom to grow in the next 4 to 7 years over there. Is that your thinking over there as well?
So, Dubai Island, what we feel is a good capital appreciation market. As you said, if you look at the transaction histories, the median price in Dubai Island is the lowest for a waterfront community, and obviously it's a establishing community.
Yeah.
And the speed at which it will establish will be much faster than what we have seen with other communities. The reason being because the plot sizes are smaller, the GFAs are less, so you'll have a lot of players coming into it. Another thing is the master developer who has built Dubai Island, what has happened is they've learned from the other master developers, because they're the ones who sell plots, and they know what are the mistakes and the learnings they've done in the other communities, and they've been able to translate that into Dubai Island. So I personally feel it's going to be much more controlled in terms of how the developments happen over there. It will be much more planned, and speed of execution is much faster because the size and scale of developments are smaller.
And the other thing I like about, especially Island A, Island B is obviously a very nice area as well. There is a nice mix of different developers.
Yeah.
And that brings out different. It's not same, you know, right? And they're all low rise.
Yeah.
Which is going to give it a really nice community feel, I think.
The traffic impact is going to be less.
Yeah.
And that's again, if you talk about, let's say, for our project specifically, so something we built into our project is also lesser traffic. With lesser traffic, there's lesser maintenance, there's better upkeep of the communities, and end customers start coming into the building. So again, traffic is very important. If you look at the master community level as well, if the traffic impact is low, I feel the community is going to thrive automatically. It becomes a more end customer product than investor product.
I was actually talking to one of my Australian clients the other day. He found me on Instagram. We started talking. Great guy, right? He's in between Dubai and Dubai and Australia, and he's planning on moving here. And he's already bought a few properties here off plan directly with the developer, and he wants to buy another one. But he needs someone to help him find something and start building that relationship ongoing. So I'm like, so we stepped in and help him. And I keep telling him, look, we should really need to look at Dubai Island because he wants to buy something close to the beach, you know, all that. So we said, okay, what other projects do you have? Because I've got these other payments that I need to pay for these other developers, and I'm like, what are they? Who are they? Or, you know, one of them is a 70-30 payment plan for a townhouse development, community development, and I go, how much have you paid? He goes, 50%.
Where's the construction at?
I looked on the REST app to see where the construction's up to. 1%, 2%.
There's just mobilization then.
Yeah.
For a project that size, it's just mobilization. Yeah.
And when I showed him that, he thought it was like the rest much more advanced, and I'm like, no, here it is. And that just goes back to how important I feel having construction-linked payments is.
Yeah.
Because these guys paid 50% already for a 1% progress. Right? Look, I'm sure they can. Obviously, nothing's bad going to happen. They progress, but the imbalance is there.
So this is the sign of maturity. Yeah. So we are coming from very mature markets. Australia, Melbourne, real estate markets very mature.
Yeah.
Yes, because of the COVID, the prices dipped. But I'm quite sure the prices now are much more stable in Melbourne. I don't know. What's your take on that?
Well, the Australian market's a funny market. My personal belief is the only people making money is the government and the banks, right? Because everyone pretty much lives off loans over there.
Yeah,
They all have to buy a house. You have to have a loan. They can give you a loan up to some people about 95%.
So you see, when the loan goes to 95%, that means the market is pretty much flat.
Yeah.
It doesn't go down a lot because that will bring a lot of risk to the banking institutions. Now, when something like that is there in cities like Melbourne or let's say
Sydney,
tier 1, 2 cities and across the world, that is a sign of maturity in the market.
Yeah.
Because leverage is critical for wealth creation.
Yes.
If we say that leverage, I'm going to work on zero leverage, that's not how businesses work. So that's a very good sign that the markets or the banks are able to go up to 95% because the banks are confident that the market is going to be flat.
Yeah.
If not, a slight appreciation, rental yields are going to be flat. Real estate also works in that way, it preserves your capital.
Yeah.
Because as and when your dollar or the currency deflates, your real estate automatically picks up the price. So, and what happens here is obviously it's a maturing market. It has a long way to go, but it has evolved fast compared to what other markets have. And because time and technology and pace of things have become different, newer country, and there are a lot of parameters, the decision-making process. So Firas, I wanted to touch base on where you think the market is headed, what's going to happen in the market, which are the best investment opportunities in Dubai. And communities are fine. We don't need specific names of developments.
It's really interesting. So when I look back at Dubai, the history of Dubai and UAE in general, especially before the golden visa was available for people, there's a big difference. I think the golden visa, I think it's pre-golden visa, post-golden visa. That's how I started looking at the market. Could be right, could be wrong, but it's just my opinion.
There was a huge momentum once a golden visa started coming in.
Pre-golden visa for an expat, Dubai, the UAE was never a long-term play for them. They come here, they earn their good salary, because they needed, this type of talent to come here and build the country. The idea is collect your cash and take it back home with you.
Yeah.
So to accommodate for those type of people, you needed a lot of apartments.
Yeah.
Right? And that's why you see the skyline full of apartments. Nothing's wrong with that. This is what the people needed at that point in time. Then you had a look at, during that pre-GVV world, who lived here? Obviously Emiratis, locals. We had other communities. And you can see that through the older communities, the way they were designed, the color schemes, the very Arab type of house, right?
So the design concept was very traditional.
Traditional, yes. That's a good way to put it. Yeah. Then the golden visa came, which meant families can now call UAE home for 10 years and renewable. That changed the game, I believe, because all of a sudden, the CEO or the accounts manager or whoever was working, he's like, hey, wife, kids back home, let's move here. And that grew the school system, the private schooling system. It's grown all these new villa communities and townhouse communities. When you go into these townhouses, you see they're designed for that type of person. Right?
Very, very interesting way of how you put it, that the designs were traditional and now you go and you see modern, sleek, cleaner designs.
Yeah, open kitchens.
Very contemporary and very modern as well.
Yeah.
I never thought in that line, but yes, so something how we relate is when you look at a building, if it's for sale or for rental, just by looking at the building. Because you know the look and feel of the building. Is it built to sell? Is it beautiful? Or it's not? It's just utility type building. Utility as in providing accommodation sorts. So that's very, very interesting way of how you put it.
Yeah. And when people move here, we always want to gravitate naturally to something we're familiar with.
Yeah.
Even though we want to move away from our familiar, right? But it's just the comfort, right? Yeah. So when you see something that reminds you of home, a house layout, a kitchen, the appliances, the backyard, the amenities, you know? Oh, well, the amenities we didn't have back home, but yeah, right? But then you start going, hey, this is your neighbors. Hey, how you start, right?
Yeah.
Okay, you go, okay, this feels like home, but in a much more elevated way, right?
Yeah.
And that's I see what's happened in the market now. There's a shift for families calling the UAE home, and I say that on purpose, UAE, not just Dubai. Like we got to associate Abu Dhabi, you know,
100%.
Ras Al Khaimah and what they're doing there, Sharjah as well. They're
For someone who's looking to invest in UAE, what's the smartest approach and what mistakes they should avoid?
Every time I speak to a client, I call them and I say, "Hi, my name's Firas. Thank you for your inquiry." I always want to book them. Once I understand what their plan is, I book them in for a discovery call.
Okay.
Okay. And that discovery call, I send them a very big document, PDF. A PowerPoint document that talks about the different regions in the UAE, what's good, what the different regions do, what type of investment vehicle the different regions provide, and I'll explain that in a second. Then when I talk to them, I categorize them into 3 different categories when they want to invest. This is an investor. Are you investing for high yield? So you want cash flow? Mm-hmm. Are you more wanting capital appreciation? Or are you wanting wealth preservation, blue chip properties? If that question isn't answered and it's not clear, you should never recommend a property to buy. Okay. And why do I say that? Is because if someone's, say, in their late 40s, early 50s, and now they're starting to think, no, look, I want to slow down in my work, I've got some cash, and I want to replace my 9 to 5 active income to passive income, I need to start thinking about where I can get the best yield return, rental return.
Yeah.
Okay, and a safe location. Okay, so putting them in somewhere that's still up and coming, right? Still needs infrastructure to go in. That's a capital appreciation type of play.
Yeah.
Where it's going to take time. We need to put this person in somewhere there's good rental demand, high rental yield, and potentially it doesn't have to be off plan. It is potentially something that's ready, because off plan needs time, 3 years, 4 years, to mature.
And there's a risk associated with it. Well, ready is, you can see, the fair pricing in the market right away.
Then we can use leverage.
Yes.
Right, 50%. I always like that 50%.
Base, yeah.
Too much, it becomes not worth it for what you're going to get in return, because most of us are just going to pay the mortgage. Yeah. Right. So that's the first bucket. The second bucket is capital appreciation. Capital appreciation is all about putting people into areas that we can see through data and through infrastructure plans, or what's happening in that area, that there's going to be very good capital appreciation, right? But with that, I put that second layer of criteria of, let's try as best as possible to put as least as possible in that project. So because we're thinking about cash on cash return.
Yeah.
Right.
The approach you mentioned about the investor briefing and the discovery call.
Yeah.
Actually, it aligns a lot with how investment advisors work in the financial markets.
Yes.
And having the thought process where real estate is a financial product.
Yes.
It kind of makes sense that, you get an understanding of what the customer wants first to get a clarity. If they don't have clarity, educate them.
That's right.
And explain to them the risks associated with it, the pros and cons with a certain community, and then taking the decision ahead. And it kind of seems very practical and methodical approach.
Yes.
Yeah.
The last category is wealth preservation.
Yeah.
This is where this type of person he's done well in their life, and just wants to put their money somewhere where it's not going to fluctuate too much. He's not interested in a big gain. He's not interested in high. He wants something that's already mature and giving him a good return.
Yeah.
And it's just steady. That's like downtown, Palm Jumeirah, these very well established hubs.
Yeah.
You see, That's that person. So once you understand that, then you can go down the funnel and go, okay, because you now want high rental return because you're this age, you want this type of income by this year, this age, right? In 15 years time.
Yeah.
Then you start working backwards,
That's very interesting approach.
right? With what you need to buy.
Yeah.
You see, capital appreciation guy. He's got look. I've got a really good cash flow business. I just want, and I've got like 3 million dirham. I want to allocate it in different things and just keep moving it as projects finish.
Very interesting. What are the sort of mistakes you see people or advisors making, both sides?
Well, so just recently, and a lot of people go, "Oh, what you do this?" And I'm like, "Yes, I do this now." I actually have replaced I don't consider myself as a broker. I buy property for people, just like a financial planner creates the plan,
Correct,
and then executes the purchasing of assets, equities, bonds, whatever it is, and then manages that portfolio. That's my approach with property purchasing. You see, first I understand where you want to get, where you are now, where you want to get to, and then we outline what properties you should be buying at what year to get to where you want to get to.
See, I think the reason why we are able to have that discussion is because you are coming from a background where you did this.
Yes.
You were developing, you understood the financials behind it. Just out of curiosity, not for publishing, when you take this approach, what sort of conversion ratio do you look at? Let's say if you're getting 10 leads a month, for example, what sort of conversion do you think, or based on the transaction history that you have done, like where do you think, what sort of percentage happens?
I stand out a lot more than others.
Better than others?
Yes.
I mean, it just makes sense that, an investment advisor's first needs to understand the market themselves, which you and I both know the market is evolving in that as well. And then, understanding the yields, what sort of yields are coming, what the expectations are, and then taking a call and guiding the investor based on that, because then the confidence level on the investor is also much better.
Of course. Should we go back now?
Yeah.
Of course. Yeah. Look, definitely. So what happens with this structure now? The person has a plan. The client has a game plan.
Yeah.
Not just for that one purchase, but for future growth.
Yeah.
What's going to happen next? Some people only want to buy 2 and that's it, and that's okay. That's the plan for 2. But some people from other parts of the world don't. So from Australia, they appreciate and they understand this approach and they get it, right? But then I've got other parts of the world where they're like, mate, no, I don't want this. Just send me what you have. I don't want to have a meeting. Just flick me WhatsApp messages with brochures and tell me why it's good, right? And I'll ask my friend to verify it. And I'm like, look, we're just not going to work together, right? So this approach does also cut out a lot of clients from me, but I'm okay with that because there's so much effort that goes into understanding a client's situation. If the client's not on board and doesn't understand that this is going to change their life, even though I've showed them why it will, then we're just not going to work together.
So one of the things that I take away from this is the customer needing to have clarity and understanding of what are the potentials available in the market and getting proper guidance on that.
Yes.
So I think that is one of the key takeaways on the mistake side that I understand from both the parties.
And one thing that I think, look, I'm not moving here to the UAE to change how everyone does business here. It's not about that. But there's over 20,000 or 30,000 registered brokers here. That's a lot of people, right? And one thing that I implemented in my process is that to engage me to do this work for you, I actually get you to agree that anything that I recommend for you to buy, that you actually buy it through me.
Okay, that's very important,
Right? Or if you don't want to do that, no problem. I'm happy to charge you a fee to give you this analysis and investment recommendations, and you can go and buy it yourself.
it give you also get to understand the seriousness of the buyer.
Yes.
You know, they're there for business. They understand that why they're getting into it, and how
Yes.
it's gonna impact them.
Yes.
So we have seen how Dubai has grown over the last couple of years, post-COVID specifically. The growth potential has been enormous. In some scenarios, doubled in 5 years. When we think about that, do you think Dubai specifically is becoming oversaturated, and the spillover is happening more on the other Emirates like Abu Dhabi, Ras Al Khaimah, Ajman, Sharjah? We touched base on that as well. But what do you think on that?
So, anytime I give someone a recommendation, depending on what they're after, for example, especially capital appreciation, let's just call it capital appreciation, I'm definitely recommending not just Dubai. Dubai's smaller pockets now for capital appreciation. Like we touched on Dubai Islands.
Yeah.
Definitely we'd be talking Dubai Islands, Villa communities such as JGE2, Jumeirah Golf Estate 2. I would be saying, yes, you need, like if you have that amount, you need to be buying there. But then there's Abu Dhabi and Ras Al Khaimah, right? Abu Dhabi has so much great fundamentals there. Hudriyat Island, Yas Island. We've got Shoba, building Shoba City there. All of them have really good fundamentals there, and I see really strong capital appreciation there. Rental yields, like if someone wants that rental yield play that we spoke about, Dubai is great for it.
Yeah.
Right? Dubai is great for it. So is Ras Al Khaimah, by the way. Just go back to Ras Al Khaimah. Ras Al Khaimah is doing some interesting things, right? Where the Wynn Casino, how they're setting themselves up not just to be that just the Wynn Casino, but also like that place where people can go on a relaxing holiday.
Yeah.
Right. Ras Al Khaimah gets 1.5 million visitors already per year. They're only once Wynn Casino opens, they're estimating 4 million people. Okay. So it's not a massive, it's not a big jump, right? And to give you some perspective, that Al Marjan Island, all the doors that are open, all the doors that are going to get built, including hotel rooms, are 20,000 doors.
Okay.
4 million people divided out by 52 weeks, that's 80,000 people a week. So even if they don't get it right, it's not 80,000, it's 60,000.
Still gonna be busy.
You're still gonna have a shortfall of properties people can rent out.
Yeah.
To stay there.
Okay.
So it's very interesting. And then people throw the idea as, what if Dubai opens up a thing? What if Abu Dhabi open up that type of casino? That's obviously we don't know any of that. But then we look at the question of America. America's got Las Vegas as its hub. New York has a casino. Boston has a casino. No one goes there, right? Everyone goes to Las Vegas. 40 million people a year go to Las Vegas, right? Macau, 20 million people go to Macau, which is the second one.
Yeah.
So talking 4 million people to go to Ras Al Khaimah, right? For this region, capture this region.
Yeah.
And it's only like a 5 or 6 hour flight from Russia, by the way, right?
Yeah.
I think it has some really good potential for capital appreciation, and then high rental yields from short-term rentals.
That's interesting.
Yeah. Dubai. What I'm following now from someone that wants rentals, high rental return, is following the infrastructure. For example, just recently, the golden metro line, the gold metro line, mate, it's going through all the great
critical areas.
Yeah, it's going through all those from all the way up the top, Maidan, Nadal Sheba, Arjan, JVC, JV2, Sports City, and then it ends at Jumeirah Golf Estate 2.
Yes.
And then you can get off that track and get on an Etihad railway.
So the infrastructure is obviously very critical for growth, capital growth.
Yeah. And those areas that we mentioned, JVC, which we're in now, JVT, Sports City, Arjan, they're very strong in rental.
Yeah.
So now we can start to think, well, there's going to be a capital appreciation here as well. When
these infrastructures evolve and you can physically see them.
Yeah.
And the benefits of them.
Yeah.
You're good? Anything you want to add?
Oh, that's
any
it.
other
Yeah,
question?
no,
I
that's
think
done. Yeah.
Um,
Would
can we
need to
do
close.
a quick fire? It's just a this or that kind of thing.
Mm.
It's just so we can pull some snips of it. Okay, it's just like this or this one.
Okay.
You just answer, alright? Okay, so also there's no theme in this.
there's no
Okay, so
There's no
off
theme.
plan or ready?
ready.
Ready.
Villa or apartment?
Villa.
Villa.
Rent or buy?
Bye.
Bye.
Dubai South or Dubai Islands?
Dubai
Islands.
Islands.
Established area or emerging area?
I would say both.
Established.
Burj Khalifa view or sea view?
Sea view.
Sea view.
10 properties worth 1 million dirhams or one property worth 10 million dirhams?
10 million.
10.
What's the bigger flex? ROI or property value?
Otherwise.
ROI.
Alright, that's all. Thank you
Yeah,
guys.
very much aligned.
Yeah.
That's actually kind of weird. Thank you everyone for joining us for this episode, and thank you Firas for being here and giving us this very great insights. I hope our viewers also enjoyed the insights and got some feedback. And until next time, thank you everyone.
See you. Bye. Well done.
Oh my god.